following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Tuesday morning here. And obviously, you guys are watching the news. You know what the score is on the S&Ps. We're down about over 300 on the Dow pre-market. Will that hold? Don't know about that, but what we've been talking about, and I've got crude oil up right now, what we've been talking about is not really being a believer in the bounce and looking for resistance areas to sell. And you guys who are long-term investors who may have bought the bounce already, and you may have bought it higher, may have bought it lower, volatility is not going to end here, guys. I mean, it's, there's a lot of adjustments that have to be made. We've talked about these arbitrage situations back to reality from some numbers that were being overlooked and the optimism that really has to be stripped out at this stage. All right. That's where we're at. We're trying to find a price, and the market's, the price is, that's the value of the market every day where the price is. But we're trying to find, a balancing point to where we can either move forward with north or obviously start getting a little pessimistic and possibly over pessimistic. So, those are the things that are going on right now. And I've got crude oil up. We're going to talk about that in a second. But, I watch CNBC and a couple other situations similar to that on TV for comedic purposes sometimes. And, you can see the tension in some of the announcers' faces and voices. And they're not following what we do on TFNN. And they're probably not playing defense like they should, and they've got some long-term holdings that they're, trying to ignore right now. But like a hostage with the machete to his neck, they got to put on a good face for the camera. So, they're putting on the smiling and everything's going to be okay kind of look. But I don't know if that's the case, So we're going to try to figure out where we need to play the defense and where we need to act upon on this show every day. So here's crude oil. And, we talked about the opportunity to start nibbling on the long side. And we talked about possibly after that 6% rally the other day, we talked about picking a battle at 43.38. That was a target up top, or that was the shorting opportunity, so to speak. And I'll go back to the weekly here. Here's the telltale sign that that the orange bar appears, and you got to so that was the hints going on. But, when we broke above 43.38, I want you to see how this works. We break above. We talked about, that's the technical damage on the intermediate. We come back and we touch this to the tick yesterday morning. And we have another massive rally. But, we talked about now 43.38 is going to have to be support, the buying opportunity. Let me just kind of scroll back so you can kind of get a bigger. I've got this kind of tightened up. You see that technical damage, boom. You got to take that for what it's worth. And you've also got to take a look at some targets we talked about up top initially, 48.71. So, this is one of those things that just worked out kind of fantastic since yesterday morning. They don't always work. I'm laughing at Tom. They don't always work out like this, but the name of the game here again, and I listened to Tom and Tommy the other day. They were pounding this home. It's all about risk-reward ratios. Taking your ball home, coming back the next day to play again. And this one worked out relatively well. Now, we're going to go look at the S&Ps, and I didn't, these are massive moves in a short amount of time on crude oil. So right now with the Shanghai situation and the Chinese numbers that came out, crude oil might take a little bit of a break here. I'd love to see a new daily profile appear. Right now, this is kind of a no trade. We're just sitting tight on crude oil. It's done what it's going to do, and there's no leverage right now. All right, so that's the drill on crude oil. We're going to go look at the Shanghai briefly, just to take a look at what's going on after the so-called horrendous news that came out in China. We talked about the long term. Let's just look at the intermediate. This is the profile appearing above. We talked about that being bearish in nature. And you know what? I think the Chinese government told the brokerage firms taskbar. Okay. I'm still not prepared for this show after a year. Let me get rid of this thing here for you guys. The Shanghai government instructed the brokerage firms to start stepping in and buying more stocks to hold the market up. This is not going to end nicely, guys. I mean, that's very interesting. So I would be wary of this situation. Final thought, and this can affect the U.S. markets, obviously. So as we go into the S&Ps, very similar situation. As we had the profile appearing above, bearish in nature, looking for resistance levels, and this is a combination of breadth, net negative. We talk about that all the time in the scanner, and being able to try to pick battles based on blocking out one side of the marketplace. We talk about that all the time, and I'm shaking my hand, and Al's probably not liking that. It's messing up his picture. So I'll stop doing that, Al. As we look at the scanner, and I'm going to pull this up in just a second, I want to continue to talk a little bit about the chart on the S&P first. Here's our 240. So the only opportunities we've had recently to short with conviction have been, we talked about this ahead of time, and it kind of blew a gasket after it settled and consolidated around there. And as we talk about a lot of times, that's not the type of action you want to see around these inflection points, is it not wanting to get away from them. 1945, 1948, that didn't work out. We got to sit on our hands and wait. And the next profile appears, and boom, guess what? 1986, 87. We are, is that 60 points lower? Yeah. Wow. Okay. So the good news is about this is we know what our orient stops. We know we can try it again. And the cool thing is 1945, 1948 are 40 points lower than where we were able to try it again. And isn't that nice not to have to suffer through the heat constantly? You know, and if you short these things and don't have a roadmap to operate on, you know, it hurts for a little while. It's like somebody pushing their finger on you. Like, it's not that irritating immediately, but after a while, it just gets irritating. Get out of the trade, regroup, do it again. I got a little gray on this matter Friday, I believe, about trading in general. And it's the same thing every day. It's like turn the wrench the same way, open the lunch pail, do what you got to do. That was a terrible analogy. Let's go into the U.S. dollar here. Again, I'm a little bullish on the dollar. 95.30. We closed above into the balanced area Friday. We came back and retested. We're hanging out above there. This is why I told you I was going to orient stops on the below this area, because I'm a little bit more long-minded here. I like how it's kind of, just kind of rattling around above that 95.30, and that 95.30 is coincidental with 95.27. So on the daily, so I like this. I think we could lurch up into the 97.10. What does that do for the stock market? I really don't have any idea right now, because these things are so disjoined. That's where we're at. We're going to take a look at the DAX. This was an interesting situation. We talked about waiting patiently until this thing came to you. Profile above, bearish in nature, can pick a battle at 10,395. Guess where we hit? 10,383. Got within 12 points on the DAX. That's nothing. Killer neighborhood to lay the wood to it on the short side with stops above, and look how this has worked out too. So we've had some trades work out recently. We've had some that have been stopped out. But again, it's letting it breathe a little more when we're right and chopping it off when we're wrong. And you may go through trades where you lose 5, 6, even 7, 8 in a row, but that's trading. It's a numbers game. We're trying to put probabilities on your side, and that's the way it works. We're going to take a look at the 10-year here too. This is something that I'm pretty interested in. Again, you see where this we talked about backing up the truck on the long side, 127, 11, 12, stops down below and getting a nice boost if we can to get back up top eventually, 129.02. And if the market continues to cave in and kind of do the retest of some recent lows on the S&Ps, and we don't really go that much higher on the notes and the bonds as kind of an inverse reaction, if you will, I'm not going to feel extremely rosy about staying long this product. I'm still looking at a little bit higher price to be attained on this, but stops again below 127.11. And a lot of times I say stops below, that's not stops at that tick, 127.11. Give yourself a noise factor, especially on the long-term views. And that's based on your appetite for risk. So I told you our formula. Our formula is to look at about somewhere between a 10 and 20% height of the box stop noise level. All right, so we kind of factor in on the automated systems, what's the thickness of the box itself, multiply it times 10%, 20%, sometimes 25% on some products, give it a little room. Crude oil especially, man, it's got some noise to it. Let's take a look at TLT really quick. Somebody's asking me about that. Again, $125 was recently where we had to look at support. That was broken through, and now what are we doing? TLT is not the same situation as the 10-year. I'm not exactly super excited about getting long this one. So, and I'm not interested in going short it, so that's kind of a no trade for me. But the big inflection point, I'm not as familiar with this product as probably you are, John, in Philadelphia. This is a no trade for me. Put a gun to my head, I'd actually more than likely want to short it. And on that same vein, we're going to come back and look at soybeans, new crop, really quick, and then we're going to get into the apples and the Netflixes of the world to cover those bases. And we'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to hit soybeans really quick, new crop November. But before I do that, I'm not making light of the market coming down and people being in pain. I mean, it's basic humanity 101 that I do care for long-term investors who are taking some heat right now. All I'm saying is that we're in no man's land. We're in a hole. These markets are going to move around. If you don't want to be a part of that, get out of the kitchen for a while. It always feels good to get out of a bad situation. You can always regroup. When we were just taking massive amounts of heat in Chicago, sometimes when I was up there, as soon as you get out of the trade, it just feels better. I mean, no matter what's happening, you can actually think objectively again. When you're in the middle of these nightmares, sometimes you can't make, and I'm not immune to this, you can't make proper trading decisions sometimes when you've got this thing going on that hurts. So keep that in mind. So I mean, sometimes it feels better just to get out of the thing for an hour so you can think. So just throwing that out there. All right, so we're looking at the scanner. Here we go. 10 years. I'm sorry, soybeans. Here we go. Okay. So again, the inflection points you want to focus on here: 861, 887, and 913. Why? This is the situation here. There's the 887. There's the, if I can move my mouse, 861. There's the 913, which is around that 910. And we talked about how important that was. If we get any, okay, now on the relatively wide profiles, we've got to pay attention to these POCs here. So 887, again, we're talking about battle points. We're talking about battle points to kind of gauge your areas of concern here. 887, 913, 861. Right now, again, as you have been watching this show, I've been bearish on this thing, trying to find resistance areas. Again, things don't always work out. Got stopped out of a couple of situations along the way, but have generally tried to not look at any support areas to do that contra trade situation. Why is 913 and 910 so important? This is our long-term weekly, and that's why it's so important. Any retracements back up into that area, you got to put the stops above, give yourself a little room, take a shot, in my opinion. I don't think this is over. And you might be thinking again, hey, it's on sale, it's come down so much, blah, blah. That's not the way it works. Things on their lows go lower, things on their highs go higher. All right, Aussie dollar. This is one near and dear to my heart. All right, so here's the 76.5 latest break point. That was 600 pips ago in the Australian dollar. We talked about some fundamental reasons that this is happening. I mean, the China slowdown is just murderous on top of commodity prices, metals in general, for this particular currency, and they've just recently stated that they're not going to mess around with interest rates. They're not going to mess around with interest rates and stay the course. And again, we've talked about, stepping backwards here. We've talked about this thing is not on sale. Same premise as beans. Things on their lows go lower. And we're going to keep turning the rents the same way until we're told differently from any technical damage. I'm a little bit more fundamentally bearish too on beans, but again, we're talking about the Australian dollar, and there's no end in sight for this thing. I mean, literally, you have to take the attitude sometimes, even in this case, that this currency could get cut in half again. I mean, that's just the way this works. I mean, Australia, population about 24 million total. They know how to dig a hole and market what's in the hole, and right now there's no market for it. So that could all change, but we'll understand what that change is. And again, you had the profile up here above price action here. You got to take that for what it's worth. We talk about it all the time. All righty. Okay, we got about 30 seconds left before our next break here. We're going to briefly drift into Apple pre-market. It's in everybody's portfolio, I'm assuming, except mine, of course. 110 pre-market. So, what's the story here? On the long term, I don't think you have any leverage for this trade. I mean, you've got something around 110 on a wide profile on the POC, but this is how you pretty much need to trade Apple right now. It's based on the 240s. We're going to talk about that a little more when we come back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances.
Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Touch of Gray. I'm going to look into that. We're going to take a look at Apple. And we're just finishing up on this. There's just the safe landing area is 102 to 117. I would just super enjoy this thing getting back to 117 so we could just kill it again on the short side. But here's the 240 numbers. 113, 109 basically is what the drill is here. Any breakdowns below 109, we could see another flush in this thing. That's what the numbers are on Apple. Yahoo, I don't know why I need to know if Marissa Mayer is going to work through her pregnancy. Somehow that is supposed to be good news for this stock. I'm going to laugh at this one too because, Yahoo has been an underperformer to say the least and been on a relative strength trading scale. This has been a nice situation to take advantage of because the so-called hand was shown so early with this thing, and it's not bouncing with, and this is a weekly view, it's not necessarily bouncing that well. And here's the daily. That was the news out this morning on her, by the way. So, man, that's really turning the stock around because this morning we're trading 31.42, and just like a lot of other things we're looking at, we had that profile appear above price action that's relatively bearish. And if you're looking for something on sale or some kind of turnaround situation, I don't know if this is the stock. And if it's in your portfolio, considering that, there's a little bit of a bearish tone on the market, not just today, overall, and I don't think this is over, and neither does Tom or anybody else that's on the network here, Yahoo could head lower. It's a weak stock in a weak market, period. All right, let's take a look at IBM. All right, similar situation here. The dailies, boom. Again, these are just mirror images, seemingly. 150, that big pressure point upstairs. Now we're trading 144 this morning. Again, I don't think this is over, but there is something happening here on the ultra long term. We could develop a new trading range. Still bearish on the stock, though. All right, let's go to the scanner really quick. Let's hit Netflix really quick. For some reason, a lot of people are always interested in this. This is one where we talked about it's trading 109 pre-market. So we talked yesterday about based on the long term. Let me pull up our weekly. Based on the long term, it really proved itself to be a strong stock in a market that was at best going sideways and down. And then as we got the gap down, they just found a zillion buyers. So the ultimate support area on this is 100, 101. That's the top of the box, top of our box on the weekly, top of the box. And here's the daily situation. So that 101 general neighborhood, 97, 98 on the bottom of our profiles on our daily. Right now, pretty, gapping down with the market without question. Is it a stock to be shorted? In my opinion, no. And when we talked about, previously, was it a stock we could play around with on the short side? At some point, obviously, these high flyers are going to reverse a little bit, but we talked about the whole time waiting until we broke 120 or 119.73 to be exact. Had the break. That was, against the long-term trend up, the contra trade situation that you could take advantage of right there. I'm going to blow this up a little bit. But again, now we're back in the balanced area. We're going to have to get back above 114 to feel good about it, or retrace all the way back to that 100 level. So right now, this morning, a little bit in no man's land here. All right, so let's go to the scanner really quick, and let's just kind of review where we're at with our odometers, if you will. All the stocks aren't open. This was... Let me just pull up our charts really quick. Let's go back to the S&Ps, because we always want to start, what's the tone of the marketplace? What's the tide of the marketplace? We're down, Jesus, ooh, we're almost down 400 Dow futures now. Wow. Okay, so as of yesterday's ending print for most stocks, we closed at around 1969. So let's keep that in mind when we go back to the scanner. And our breadth really has just been predicating on a long-term basis. When you find and can be presented resistance areas or breakdown areas, then you have an actionable situation. We have not been looking for buy the dip, even on a short-term basis. That's still the case. And here's the long-term weekly. We talked about this thing religiously when it started happening, even on a grand scale around June 4th. Still the case. And we've been relatively bearish on this because of the flip-flop action between the two time frame breadths, weekly and daily, since the first of the year, basically. Again, still, I think the ring in the register side of this is to still look for resistance areas. But what do you do on a morning like this morning on the S&Ps? Here's the situation. That 1946, 1945, 1948, that's the big area now. We used that this morning already. If you get any retraces back up into that area, we're still going to be very negative on the day still. And I think those are the ones, that's the area, the big area you got to look for. And then on the ultra short term, you've got a bottom here on our 240s at 1921 and a top at 1940. So again, I'm just not a big fan of buying the dip here. I mean, I'm passing on these things. You could use that as resistance area on the short term. But again, if you're going to get long this, that's going to be the area you got to orient stops around 1921, 1922. Okay, so let's go back to the scanner. We understand the tone of the marketplace, the tide of the marketplace, and let's do some. Let's do this. Let's find some stocks. Let's just find some stocks that are hanging in there on the long side, on a long-term, ultra long-term basis. Let's go to BBY for a second. Oh, we're doing something really cool this week. I think we're going to release it. Going to have kind of an alert chat window up there. We're going to alert you to things that are going on, just things to be aware of, and some other features, long stocks, quick buttons, short stocks, reversal stocks, things like that. Okay. So Best Buy, obviously the technical damage was done as far as we're concerned above 34.38. And this morning we're trading 36. So you got some big resistance between 33 and 34.5. Excuse me, big support at 33 to 34.5 on this stock. That's where I think a relaxing, market pulls in. This stock kind of empathetically pulls in with it. That's your buy points on this at this stage. That's where you can take a shot. I don't think you can just kind of blindly buy this thing right now. All right, and that's all sitting right here in front of you. Okay, let's take a look at CME Group. CME, just to kind of take a look at this. This one's saying it's at the top of our profile on our weekly. And as you can see on the long term, that's exactly what's going on. And what do you do with this? So pre-market, I think we're open here. Let me see if we got some prints here. 31. No, this stock is not open. Let's go back to that and see where it opens. Okay. Hospira, man, that's been on the long list for a while. Eesh. Not to short. These are stocks not to short. I'm not a big fan of going long stocks. These are the strong stocks. PVH, let's take a look at that one. PVH. Okay, so again, this is one kind of looking launching paddish right now. It's a $118 stock right now. I like the way this is acting. If you're short this thing, you got to be a little concerned. It's kind of following all the rules here. This may be a little bit of a chance if we get the theory is this morning, if we get a little bit of a gap down, just people taking some positions off from the short side, these are the types of interest. These are the types of instruments, in my opinion, that might be super painless if the market continues to go down this morning, even after the gap down. These are theoretically stocks that should not really fall to pieces. So, and if the market starts moving up, these are the strong stocks that you can orient stops around, which is really cool. And those stops, there you have it. And you've got some kind of. I think we've got Tom O'Brien on. Is this our lucky day?
What's going on?
Hey man, how are you doing?
I'm doing great, man. Yourself?
Doing good. What's on your mind?
Well, the thing that's amazing. Well, first off, your show's amazing, and
thanks.
I want to thank you for kicking us off every day.
Thanks.
It's intriguing here, man. Is that, and I know we all watch the Asian markets, but when you look at those markets, man, last night, folks, this is a monster heads up, okay? Because the bottom line is that we have bounces, fast, furious, and all of the above. But guess what? When you look at the Nikkei, when you look at the Hang Seng, man, they close deep into their lows of the 25th.
Yeah.
And what that's telling me, man, is that it's going to blow it away tonight. So it's going to be intriguing watching this baby play out, man.
What's interesting too, Tom, is the Shanghai was artificially held up. It probably would have been in this same scenario.
That's right. The same Jing they couldn't hold it. I know.
Yeah, I mean, and there was some kind of pseudo government intervention again. So it's
they'll just kill you if you go shot, man.
Yeah. Yes, exactly. I got the Nikkei up right now, guys, and again, looking at the 240s. We've got some things to lean on here as they happen, and that's the good news. Where do you think this S&P situation is going to end up, kind of settling down at? I mean, where's the ultimate target on this, in your opinion? It's a hard question.
When I take a look at this baby, it looks to me like the next, well, the first level. So cash, we're at 1972. 1820's game. That's $150 down. That's the high volume swing low from October of 2014.
And you know what? You know what's going to be the case, as you know, is in between now and then. It's going to be the Wild Wild West. It's going to be. I mean, we're going to have. You remember in 2008, we had up days. I mean, like 400 points. You remember that?
We had a 900 up day. What happened is that we were short the market. We had some vicious down drafts. And I actually flipped the position, even in the newsletter, and we got the 900 up day, and I flipped it again.
Wow.
And it was a mind blower, man. It was the biggest day I ever had in the marketplace. I mean, I thought I was seeing things in front of the screen. So, yeah, there's no doubt, man. I mean, it's that bizarre. There's no doubt about it. What is going to get really wild here, because what started showing up yesterday was actually and this is where this gets scary for people, period, okay? Because what starts showing up was the August of 2011 numbers on some individual stocks.
Right.
And that's a freaking huge number, man. That's a whole different ball game, So it's like, okay, man. And I guess, and all, I know, you were talking about, the financial press this morning, and it was just an absolute mind blower to me that they keep telling people to buy. It's like, oh my God. And in the front cover of Barron's too, I was elated to see it actually. Stock market shock. Why the worst may be over. It's like, oh really?
Yeah.
Okay.
These, they change on a day-to-day basis so wildly too. I mean, I'll look at a couple of newsletters that come across my desk, and some of these people look ridiculous. I mean, I'm like, how can anybody subscribe to this thing, for one thing? But if you follow these people, they're Monday morning quarterbacks, and then the whole game changes, and it's just weird. What do you think this is going to put a lid on crude oil for a while? Just the demand situation, and do you think we've seen the recent highs on this October contract, or what do you think in here?
Man, I like how it's set up. I mean, it would happen. So if we take a look at this, when you get that kind of wide price spread with volume, it's like, okay, man, this baby's pretty cool. I mean, I would love to see, we hit that, we hit 49.33 yesterday. We're at 47.21. I mean, if this thing ever could come back to like 40, 47, man, might be the buy of a lifetime. Who knows? I mean, but it's, to me, it's in no man's land right now. I wouldn't trade it, period.
Yes.
You know what I mean? Because we both know that what happens, folks, is that oil is $1,000 a point. So that's,
right. I don't think anybody knows what to do with it. It's a tug of war that it was oversold. We've got supply issues, and we're in no man's land. I agree with you fully. You want to hang around?
Yes, sir.
Okay, cool.
Okay.
We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show, and we're lucky enough this morning to have Tom O'Brien with us. Tom, you still there?
Yes, sir.
Great, great. Hey, XLV, the healthcare sector, you been following this one?
XLV, I really haven't, but I mean,
Okay.
healthcare's been nice. There's no doubt.
I was going to point out that if everybody's kind of using the scanner and kind of using it as a barometer to, know when it's okay to be long or be short, we had an indication on the long term. We closed below on a weekly below our profile, and that would have avoided completely that situation last Monday. You know what I mean? If you see that, would have kept you like, okay, we are weekly closing long term technical damage, time to sit tight, and then just and as an example, I think this sector is still like not the sector to short, but just didn't know if you had any thoughts on it.
Well, see, it's been sticking out like a sore thumb with all of it. Like I got the XLV up right now, and that also had a high volume, spike low in 2014, that October 2014, and that got hit with some velocity. So it's like, man,
right.
And if those things break, on counter trend bounces, this is going to be a field day, man, because that went one way. I mean, that sector went from $29 to $80 like in a heartbeat. $79.
That's incredible.
There's no doubt, man. There's no doubt. This is going to be incredible open too, man. This is going to be sick.
Yeah, I know. I think I gave some numbers a while ago, but we just continue to erode here. This
Well,
is
something that everyone should watch. So we're at 17.1750 right now on the S&Ps, the futures,
Yep.
right?
Hmm?
1887. Now I'm just pulling this out. This isn't a profile, but this is what this is. 1887 is where we bring this back a bit. So if I bring this back, you break 1887, man, and this thing is not going to have anything in it. And where I'm going with the 1887 is this: is that when on the 25th, that was at at 340. The top of that's how futures contracts. We came down to 287,000 contracts. You break that, man, and it's going to be just a bad scene. You know,
Yeah, I mean,
but it's a bad enough scene. If you go to 1887 today, that'd be down the Dow down 700. Okay, but that's where it looks like we're going. So,
and now Tom, you've got the people that, okay, they may have bought the blood in the street mentality by the dip the other day, and now you've got two things going on. Do they continue to add up and dollar cost average in? Or have they looked at it as if, oh, my God, I missed my chance on the bounce to completely get out of this mess for a while? You're going to have extreme volatility because there's a lot of emotion out there right now. I mean, these types of moments, just drive people to do weird things, and
Right.
you don't really know exactly what I think 60% of the trading on the exchanges now is done via some kind of algorithm, and those things are momentum driven a lot of times. They don't make a lot of sense, and you combine that with just complete uncertainty, fundamentally speaking, and psychologically speaking. I mean, be prepared for the volatility. Try to pick your battles around high probability areas,
And one of the hardest things to get your head wrapped around is that how does it what I don't really quite understand, even for fundamentalists, they don't think of corrections ever going to come, and then when it does come, all they do is say and keep buying. This is the weirdest business in the world, the business we're in, because it goes back to the 1930s. It never changes, man. Oh, buy.
Thanks, Tom.
Have a great one, man. Have a safe one.
Okay.
Bye.
Guys, have a good day trading. Stay tuned for Larry. He's next. We'll pick it up tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.